Hey guys, it's Thursday. Welcome to another edition of All Things Real Estate. Well, I just finished showing a house to a buyer who he's freaking out about rates a little bit. Not gonna lie, they're a little bit high and they are really affecting his buying power. And he was looking last year, and when we had the 3% rates that everybody loves so much, and he just did not want to compete with all those multiple offers. We made a few offers and he just was like, look, I'm out. I don't want to do this anymore. So he decided to kind of wait out the market and rented a house for a year. Now he's back in the market trying to buy at higher rates. And, we're just experiencing some housing buying blues with the situation that he's in today. So I thought what I would do is give my take on the real estate market that we're in, especially since rates went up. The base rate went up a couple weeks ago. And just give you my take on the current real estate market as I see it. And, those news stories that you hear are not always what they seem to be for people like me who are actually out doing the work of real estate and not sitting in a newsroom looking at reports and things like that. So thought I'd give you my take. I hope you stay tuned.
All things real estate and all things real estate.
So I thought I'd talk about what has changed and what has stayed the same in this real estate market that we're experiencing here now in 2023. So what has changed is obviously the rates, right? The Fed raised the base rate a couple weeks ago by a quarter point. Everybody kind of took a deep breath and thought, oh my gosh, rates are going to go up again. And what was weird about the situation was that rates actually went down. So, and my take on that situation is that the economic indicators all liked the fact that the Fed raised the base rate. They liked the fact that the Fed is trying to stave off inflation, and they thought it was a smart move. So they felt more comfortable with where the economy is going, and they decided that the risk was less, and so they were going to lower rates, which kind of took everyone by surprise. So rates are right now in the low sixes, high fives, depending on the different sort of loan that you're getting and that kind of thing. So that is the big thing that has changed, obviously, since last year is rates. The thing that has stayed the same is our continued low housing inventory. So it's still really hard to find houses that buyers want to see in their price range and things like that. So now what we're seeing is everyone is sort of used to these new rates in the sixes. And now, since rates have ticked down a little bit too, we are actually experiencing multiple offers again, which has just been crazy, right? We were competing at 3% last year for houses for buyers. Now we're competing at 6% this year for buyers. And so what I have told my buyer who is frustrated and doesn't want to compete for houses in a 3% or a 6% market, what I've told him is, look, this is what you need to do. Talk to your lender. Make sure you're getting the best rate that you possibly can. Take a look at different loan programs. Look at 15-year loans versus 30-year loans. See where you are at. Look at that monthly payment and, make your choices from that. And then we will look at houses according to those choices, right? And what the best loan program is for you and what the best rate is that you can get. So that's on the one hand. On the other hand, when you look at the big picture situation, sorry, there was a car that just went by. It distracted me. When you look at the big picture, I want to always remind buyers that real estate is pretty much always a good investment. It may not be a good investment in the first year or two, right? Because house values may go down. Now, I say that they're not projected to go down. They're actually projected to go up this year. Depending on who you look at, they're projected to go up by between 3 and 6%, which is a normal amount. So real estate is always a good investment. When you can buy, you should buy, and you should buy what you can afford. So that is something to just always keep in mind when buyers in general are frustrated about rates. It's always going to be beneficial to you to buy versus rent, in my humble opinion, as a real estate broker. So that's my take on the situation with the current real estate market. And if you have any questions about the buying or selling process, I do hope that you get in touch. And I hope to see you next week on another edition of All Things Real Estate. Next week, I will have 2 new listings coming out too, and I will have videos for you of those. So I hope you tune in. See you soon. Bye-bye.